Target Trading Academy.
Good afternoon, everybody. Preston Vogl here at Target Trading Academy with today's Micros Market Recap. Let's get right into it. It is after the close of New York, March 15th, 4:03 p.m. Let's get right into it. Now, oil opened gap down well below its close from yesterday. You can just see we had quite a bit of play in the market today. And it's going to be rolling over here tomorrow, I think. We're seeing more and more traders leave and go into the new contract for next month. But we opened well below that close. There's the contract low, closes up here. And they didn't even look back until lunchtime was over. 1 o'clock came and they're like, oh, yeah, we forgot about that close from yesterday. Let's see if we can make it move up. So without saying much, we are finishing net down on the day in oil. Gold, well, we actually opened gap up yet again. Seems like we're going every other day where gold really starts to make a move. So if that's the case, tomorrow it might just stay right in the middle of the range for what we put today. I don't know. We will see. It's not a normal week by any means. We have rollover in our equities. We had rollover in the British pound, and now we're going to have rollover in oil at the end of this week as well. So quite the the week to be trading. I would definitely wouldn't recommend anyone trading live during those rollover periods. Most certainly not in the equities. Just tons of participation now in two contracts. But with that being said, gold did open gap up, and it just now seems that after it closes, we had to move back down towards that close. But again, not really getting it. We closed just before at 1:30, and then that move down was the aftermarket hours. So that whole time this morning from the pit session, they were just trading above those values and not wanting to go any lower. So we did ultimately close above the close from yesterday. Now our equities, well, that's a little bit of a different story. We did open ever so slightly below that range in the ES here, or I should say micro ES. Let me scroll back here. So there's that range low, and you can see where we opened up, and that close was decently far away. We have yet to get to it. We'll see if this next hour before the Chicago closes gets us up there. I don't know if it will, but we are ultimately finishing net down on the day. But you can see there was an initial buying pressure in that first 10 minutes to possibly go fill that void. Ultimately, though, it just turned into the same type of trading it has been in the past few weeks. Just the choppy, consolidated movements, no real clear directional moves, no trending moves. And that's fine. It just gives further weight and credence to these levels that are out on the charts the night before the next day's trading. So they just get a little bit more action. Yes, there are rules around them, but you can see the support holding around those areas. Ultimately, the buyers did step in towards the end. Did at one point during lunch, they did take it down and made new lows. They had that round trip. Looked like they were going to search for a breakout and keep going lower, but ultimately the buyers stepped in and brought it back up after those lows. So they were pretty short-lived. As far as the NASDAQ goes, we have gotten to its close from yesterday. We opened inside of its range for all intents and purposes. There's that range low. And we just were in balance. And it didn't take long to get up into balance and head towards that close, as we were pretty much there when we opened. So with that being said, the NASDAQ opened in balance, had some tests at those range lows and the HVA edges, but for the most part, it was just stuck in that HVA, and then towards that end, much like the ES, we got more buying participation, and then they did get that close from the day prior, or yesterday, I should say, and ultimately are finishing net positive. So we have a little bit of a mixed market signal, mixed market sentiment. ES is down, NASDAQ is positive. It's okay. It's just this whole week has been choppy as can be. There's a bunch of stuff going on in the world. Not that it really matters too much. I mean, banks, they fail all the time. Whether you choose to put your money in an institution, that's up to you. And if you're worried about the insurance not withholding, I mean, what else are you going to do? You're going to hold it in cash on your pillow? I mean, that's your choice. But these are just the times we live in, and we got to adapt to what's going on. And that also means adapting to the market environment. Is it going to be choppy like this for the rest of our lives? I don't know. It could be choppy like this for years to come. Or we can get volatility in and it can go through the roof or all the way down to the floor. It doesn't matter. And there's no point in overthinking and over speculating on things like that. You just have to trade what's in front of you. The market gives you what it gives you. You can't force it to give you any different outcome. You trade what's in front of you, and that's it. And with our methodology that we have in the rooms, we have pretty strict rules about what can be taken and when and where. So if you're looking for the mentorships or setting of someone helping you understand what's going on, helping you understand the methodology, getting levels the night before, then feel free to reach out to us. We are Target Trading Academy. You can find us on Facebook or go to our website directly at targettrading.co. Again, that is targettrading.co. Get in touch with a consultant at either location. They'll gladly show you what we do in our rooms each and every day, and you'll be able to see for yourself why we are the number one trading education company in the world. With that said, we look forward to seeing you there, and have a good rest of your evening.